Yeah. So today I'm going to start with the very standard 12th state board economics. Okay. Standard 12 state boards economics. I will start. So first of all, we need to understand the economic is what. Economic is nothing but related to the financial condition. Whenever we are talking about the financial condition of a country, financial condition of an individual person, financial condition of a state, financial condition of a home, firm, it's all about economics. That's the main reason. If you see in your book, so there is a rupees is given, right? And rupees, what it is, and there is macro, semi, consumer demand, utility, GST, monopoly cost, price and taxes, gross domestic product, Reserve Bank of India, okay, value index, revenue. Clear? Now we will directly start with the what we need to understand, right? So directly start with the what we need to understand. So these are the points which we need to consider it, and which is very important. Like these are the main statements are there, and that statement needs to be understood. Okay. So here are something written for teachers. If you see, so these are the thing for teachers. To begin with, they get familiar with your textbook. The present book has prepared. Okay. So if you see in your economics, there are total 10 chapters are there. Okay. Introduction to economic, micro and macro, utility, demand analysis, elasticity of demand, supply analysis, and then forms of market index number, national income, public financer of India, and money market and capital market in India. Okay. So let's start with the introduction to micro and macroeconomics. Okay. So first of all, I want to tell you that what is exactly the micro and macro. Micro is nothing but this word is came from the microscope. Like economic means whenever we are studying the financial conditions. So in micro, whenever we are trying to understand the small conditions of a particular whole part, that is called microeconomics. Macroeconomics means like we are studying that. Like if I want to understand the condition of a Mumbai, so that will come under the microeconomics. If I want to understand the financial condition of a country, that will go in micro. If I want to understand the financial condition of one mall, that will be the macro. If I want to condition of Mumbai, all the malls, that is called as macro. So micro and microeconomics you have understood. Okay. So by this term also, I is for individual, A is for aggregate. Okay. So microeconomic and macro are two main branches of modern economics. Okay. So this micro and macro are the branches of modern economics. The term micro is derived from the Greek word micros, and which means small and millionth part. Small or a millionth part. The term micro is derived from the Greek word which means large, small and large. So here they are saying that micro and macro, it is a Greek word, it is a branch of economics, and it is derived from the Greek word, and it is the micro means a small, macro means a large. Okay, and this term were coined by the Norwegian economics Ragnar Fringe of Oslo University 1933. So this term, the micro and macro, it is actually emerged in 1933 by Ragnar Fringe. Okay. And then main branches of economics. Okay. The main branches of economic we need to study. What is the main branches? There are only two main branches, micro and micro. I want to give you the example to understand better. Like if you want to understand the in your home only, okay, where you are living, if you want to understand, like just imagine you are economics and you want to study about the financial condition of your home. So whenever you are directly talking with your father and trying to understand, that is called as micro. And whenever you are, because your father will say lump sum directly, but whenever you are trying to understand how much products you have and on the basis of how much things you have in your home, on the basis of that you are calculating, that is called as microeconomics. Clear? Okay, so here a little bit information about is given. Okay, so now directly come to the meaning of micro and macro. Okay, micro means a small part of a thing, that's it. Many times I don't want to explain, so same thing it is written. Micro means nothing but the small part of a thing, and then microeconomics thus deal with a small part of a national economy. Okay, so micro means a small part of the thing, it deals with the small part of a national economy. Clear? And it studies the economic actions and behavior of individual units such as individual, consumer, producer, firm. Okay, it studies the microeconomic studies the individual behavior, consumer, producer, and a firm. The price of a and they are trying to understand the price of a commodity or a factor. Clear? Factor means factory. Okay, so this is the meaning of microeconomics is nothing but it studies the small individual consumer, individual producer, individual commodity, individual firm. Okay, so definition which are given by the economist like Morris Dobb. Microeconomic is the microscopic study of economy. It is the study of microscopic study of economy. Economy means just an environment unit, study of financial condition and microscopic study. Okay, microeconomics consists of looking at the economy through a microscope, as it were, see how the millions of cells of a body of an economic individual household consumer. So the same way the meanings are same. They are saying that microeconomics is nothing but the you are studying about in the depth. Okay, you are studying in depth. Clear? Like for example, whenever you see the Google Maps, everyone know Google Map. Okay, so in Google Map, if you want to reach to that place, what you are doing, you are zooming it, and while you are zooming it, you are trying to go in a micro level. You are understanding, okay, I am living here, I am living. So the same way microeconomics is trying to zoom in, and then they are understanding exactly because of this thing is happening, because of this we are earning. Okay, so because of Mumbai, if you see the whole country, because of Mumbai, the Indian people are earning too much. In like if in macroeconomics I can see that Indian people are earning, but how? With the help of microeconomics we understand, okay, because of Mumbai, Delhi, Bangalore, we are earning much. Okay, so there are certain scope of this microeconomics are there. Three scopes are there. Theory, there is a theory of product pricing, and theory of factor pricing, theory of economic welfare. Okay, so what is the theory of product pricing? The price of an individual commodity is determined by the market force. Okay, so individual, so the price, if I talk about the microeconomics, is deals with the theory of product pricing, like any commodity. If you see tel, kangi, whatever, digital media, bike, car, so this is actually the price is determined on the basis of demand and supply, and microeconomics is concerned with the demand analysis and individual consumer demand analysis, individual consumer behavior, this. Okay, so microeconomics is concerned with the price only. Whenever you are studying about, it is concerned with the price. Theory of factor in economics: land, labor, capital, and tribute are other factors that contribute to the production process and helps in determining. Microeconomics helps in determining the factor rewards for this and in the form of rent. So theory of product pricing: microeconomics deal with the understanding the price of a product and understanding the how the products are made in a factor. Okay, then theory of economic welfare: microeconomics in short, like to understanding, and they are saying that it is helping in the society or not, everyone is getting benefit or not. Okay, so I'm stopping here.